Welcome, everyone. I'd like to kick off our next session here. Liquid fund managers, narrative, fundamental, or quant, with moderator Mitchell Dong, CEO, Pythagoras Investments, and speakers CK Zheng, CIO of ZX Squared, Raghav Chopra, co-founder and managing partner of Tephra Digital, Cosmo Zheng, portfolio manager of Pantera, and Dr. Sachin Jaitly, general partner of Morgan Creek.
Hello, great. Good morning, everyone. Thank you for being here. We are going to be discussing liquid funds as managers from our perspective. And just to kind of kick things off, I think we'll start off with some introductions. I will start and we'll hand it off down the line. So my name is Dr. Sachin Jaitly. I am one of the founders of Morgan Creek Digital. The firm's been around for 20 years, but our latest iteration of our firm was in 2018 when we started to focus on Web3. So we invest both in the startups from an equity perspective, as well as the liquid tokens themselves and the digital assets. Today we have over 80 portfolio companies and token projects that we've invested in. We've launched 4 funds. To date, we've deployed about $500 million and looking to increase that over the next few years. And I've also recently went back to school and got my doctorate in crypto, so geeking out on that front as well. With that, I'll hand it off.
Hey everyone, my name's Cosmo. I'm the portfolio manager at Pantera. I manage all our liquid token strategies. For those who don't know, Pantera is a crypto-focused investment firm. We're the longest standing or most established institutional firm investing in crypto, starting our first fund in 2013. We manage about $6 billion of assets, about $4 billion of that is venture, and about $2 billion as liquid. My role is really to manage primarily our hedge fund, which is the core of the strategy is fundamental, very process-oriented, and sort of trying to adopt the traditional long-short equity approach to digital assets, because I truly believe tokens are a new form of capital formation. And before I joined Pantera, I was running my own fund called Nova River, which I had founded about a year earlier, also investing in digital assets. And then I have I think a lot of Harvard kids will understand this path, a very traditional path coming out of Harvard. After I graduated from Harvard College, I did a couple years of banking, did a couple years of private equity at Apollo, and then many years in long-short equity in New York.
What year did you graduate?
That was 2011. Mather House.
And what did you learn that applies to blockchain?
Yeah, I learned that applies to blockchain nearly nothing from 2011, but I do think that the most important things that I learned from college were maybe not subject matter. It was like how to think, how to process things, and really how to interact with other people and create relationships, because ultimately investing is about learning about the world and understanding how people work, because businesses are just collections of people. And so I think getting exposure to a lot of different people from a lot of different backgrounds and understanding a lot of different topics was really what I took away. I mean, I studied math, but I don't use math anymore.
Yeah, go ahead.
Great to see everyone and to be back on campus. I'm Raghav Chopra. I'm co-founder, managing partner of Tephra Digital, which is a liquid digital assets fund. My background has echoes of a lot of the others here. So I started my career in investment banking at Goldman Sachs, did private equity at Carlyle, and then was an equity hedge fund analyst and portfolio manager. And over that period, got interested and curious about digital assets and began to see a new asset class and technology taking off that had parallels to investing in software and investing in financial technology industries. And so bringing that experience to the liquid digital assets world here, I think is at a unique time where this industry is becoming institutionalized. You can see all of the interest from people at different career stages, as well as from different industries and backgrounds, and I think we're on the cusp of an inflection point.
And what year did you graduate from HBS?
2012.
And what did you learn from HBS that applies to what you learned today or doing today?
What I learned is that when you have a disruptive technology, make sure you're on the right side of it. And the most interesting
and is that what
case.
you learned from Clay Christensen?
Learned that from about 100 professors, and the best one had the example of a textile mill here in Massachusetts, where the owner had a choice of either letting everyone go or keeping them and keeping old technology, and ultimately that mill didn't make it, and the mills that let people go brought them back later as skilled workers.
So what does that tell you about blockchain companies that laid off people last year?
I think they were perhaps responding to the market cycle, but not the long-term trajectory and adoption curve.
Please, CK.
Hi, I'm CK Zheng. Very nice to be here. Actually, I came here quite often, even though I not graduate here. My daughter graduated here 4 years ago, and I actually came
college
here.
or a business
Young
school?
college in the CS major, and I took some classes as a parent that came here, so it's very interesting. I graduated from Chicago, unfortunately, many years ago, 30-some years ago, with my PhD, and I remember it's so cold in Chicago. It's good for school.
Yeah, and it's hot here, by the way.
Yeah, it's, the thing is I learned from my PhD years in Chicago, not blockchain. It's more of, using farmers' market efficiency theory in the financial space. What I'm particularly interested, is a co-founder of ZX Square Capital, is how can combine the traditional finance, which I major in derivative pricing, option trading, to the crypto space. And I think in the last few cycles, a lot of people get burned, a lot of people get wiped out. And I find it's fascinating to see that. I think a lot of things, people don't really think hard about the crypto and all in and leverage up. The way I see it is how do you manage the risk? How do you survive in the crypto cycles? And, outperform, the benchmarks. And actually using options and the derivatives, smartly, you can reduce the volatility by more than half. So what we do is try to achieve high Sharpe ratio with half of the volatility of Bitcoin and still outperform Bitcoin. And that's what we actually specialize in.
And how do you avoid blowing up?
And then that's what we think make this particularly interesting is you have to look at data, you have to look at the market cycle, you have to look at the leverage or deleveraging process. So when Luna blew up in last cycle, I say there are a lot more come to the market that you're going to see, massive wave.
And how did you guys do during the Luna crisis?
We actually pre-hedged in many of the deleveraging process. We find that there's a lot more, things will blow out. When FTX finally blew out, I called the bottom. When I talked to Quant, I say the bottom's in, and many people believe I'm crazy.
And is your daughter in crypto now?
I'm trying to convince her, but she said, well, she's working on metaverse. She's doing more interesting things in crypto.
Right, got it.
They will converge.
Eventually.
Right. So I apologize, everybody, for being late. I got confused with the schedule, but I'm Mitchell Dong, and I've been running a crypto quant trading hedge fund since 2014. So that's 10 years of gray hair of trading crypto. Thinking back, if I just bought Bitcoin at whatever the price was in 14, 100 or 500, it would have been up 100x instead of I spent all this brain energy building a hedge fund, and I'm not a billionaire yet, but I'm also not in jail. So I guess it depends on what standard you have. So I was gonna. So I'm a little confused. Are you moderating or am I moderating? Oh, okay. All right. Good. So I was gonna start with one question to everybody, and then then I have planted, I don't know, a dozen or so people, interesting people with interesting questions. So for all my plants, get ready for your questions, okay? So my first question, I'll just ask everybody is, If you were pitching an investor with your fund, why you? I mean, why are you uniquely suited to do what you do? And what is your competitive advantage? So anybody wants to start with that?
Yeah, happy to take that. So this is a real question that I am confronted with on a daily basis because we fundraise and we're launching our latest fourth fund. And you know, the answer for me is probably, it comes in twofolds. One is about our thesis and the other is about our team. The thesis that we have around digital assets is very analogous to the start of the internet, 20 years ago. So at that time, there was really hundreds of protocols that were being put forward to create the internet as we know it today. We ultimately landed on probably a half a dozen or so, right? www, HTTP, STMP, TCP. And that's how we operate the internet today, with those half a dozen or so protocols. Our thesis, and by the way, the reason why those landed and the way they did is because they provided very unique use cases and purpose to this world. There wasn't a redundancy amongst those half a dozen or so, and those really stood the test of time. We see something analogous that's happening here with blockchain protocols and digital assets in general. Today, I think CoinMarketCap has something like 30,000 tokens that are out there. The world does not need 30,000 tokens. I believe there's going to be a massive consolidation around all of those. And so, to answer your question, we are looking at very specific use cases around those protocols that are going to drive value in the world. Right? Bitcoin has a very purposeful use case as a store of value. Ethereum has a very purposeful use case. And there's others out there, right? Solana, and perhaps Avalanche, perhaps Filecoin.
I wanted to keep it relatively short, so.
Sure. So I'll just say the idea there is there's going to be a consolidation around, and that's our thesis. And then our team is former founders and entrepreneurs of tech companies. So we'll
So
leave it
would
there.
you say the team is the most important edge?
I'd say they're both equally important, but yeah.
Right.
Here.
Okay.
Here you go.
Cosmo?
Yeah, I think it, maybe to keep it brief, or try to keep it brief, comes down to two things. One is really our thesis for how we are approaching this space. I think we're at an inflection point in this asset class where only now can fundamental investing actually be applied. And team-wise, myself and Raghav actually maybe are the only two people in the world with private equity and more than 5-10 years of long-short equity experience in all of crypto. And so to the extent that matters, to the extent that experience understanding how real businesses work, how fundamental investment processes work, to the extent that happens, there are countably many people in the world that have that experience in
Yeah,
crypto.
no, we're glad that the only two in the world are here on this panel.
We talk to all the managers, and to
Right.
the extent it matters, that is true. And so, and why do fundamentals matter? I think it's, again, we're at this point where only now are there real protocols with revenue models, with real businesses actually being built. This wasn't true as recently as 2020 or 2019. So it's a very new phenomenon. And if we believe that crypto is going to penetrate more aspects of society, if it's going to have more impact and build more new businesses, almost by definition, these tokens have to trade on fundamentals because that is how these businesses will get funded and will get built. And so this space will become more fundamental over time if you believe that crypto will
So
succeed.
in one or two words, your advantage is you're the one of two in the world that do what you do exactly.
I think a lot of people do fundamental investing, let's be clear. I think there are very few people with a lot of experience doing that in traditional markets.
Raja?
So why Tephra is really just three things: the product, the strategy, and our operating platform. So the product, really, we're not degen experimenters, and we're not boomer skeptics. And somewhere in the middle is a real focused and fundamental
What's a boomer
strategy.
skeptic?
People who don't believe in crypto, Mitchell. There's still people out there.
I haven't met any.
So we manage risk and think of a cohesive strategy. And then on strategy, it's really an understanding that this space involves macro, it involves sector themes, and it involves a lot of the bottoms-up work that Cosmo was talking about. You have to have all three. You can't have one of the three. You need all three. And then lastly, in starting the business, what was important to us is making sure the operations are perfect. So we have capital from a publicly traded investment bank, and money management and asset management's a serious regulated business, so you have to do it right.
Yeah, a lot of people underestimate the operations part because, of course, a fund manager needs to know how to make money. But if it's, you're running a business, and if you don't get the operations right and the accounting and the IT and the back office, you're not running a proper business. CK?
Yes, so two things actually, we actually very unique. One is me and my co-founder, combination of crypto native versus the traditional Wall Street finance. My two co-founders actually have issued 2 coins, top 300 in the world, very successful in the crypto native space. With the Wall Street displaying in terms of risk, we're actually very unique. We think there's a lot of risk actually in the crypto space. People don't know about it.
So it's a combination of you.
It's
and your
combination, I think, will make it perfect.
Got it, understand. So I'm going to go to audience questions, and I see Katie. Katie, explain, let's see, Harvard College, 2005.
Hi guys, Katie, Harvard 05, Lowell House. I'm at Blockville's crypto trading firm. So my question is a 4-parter, but it's kind of a rapid fire, so don't get too overwhelmed. I would ask this: most overcrowded trade, most overhyped product, biggest risk, biggest opportunity.
Most crowded trade is ETH staking. Hottest is a play on that, which is Athena. And then I'm going to defer to my buddies here for the rest of it.
My answer to all
Not
4 of
everybody
those.
has to answer. If you have an answer, then just
My
throw it
answer
out.
for all 4 of those are meme coins.
If you don't have an answer, you don't have to.
Look, I think the most crowded trade is probably liquid restaking, and I don't know. I don't think that's necessarily overhyped, but that's certainly the most crowded trade. I think the most underappreciated is probably DePIN, just decentralized physical infrastructure networks. The market cap on those is very low for the potential real-world impact they could have.
In the aggregate, meme coins, most crowded, unnecessary, least appreciated, and biggest opportunity, smart contracts, so enterprise use of blockchains.
I would say the most promising, the most rewarding potential would be AI-related meme coin.
Elaine, you're taking pictures. Explain who you are and your question.
Okay, thank you. I currently working with okay, sure, yes, yeah. I currently working at the Carbon Sense. It's a total different part. Louder. Okay, sure. My question is, should I buy more Bitcoin now, today, or?
Okay, so the question is, should Elaine buy more Bitcoin today?
I think whenever someone asks that, the unfortunate caveat is like, what is your investment time horizon? What's the goal of Bitcoin in your portfolio? If you're at 0, you should definitely go up from 0. If you're at 100, I don't know. Well, you probably shouldn't take on leverage. So, and obviously, I know it's somewhere in between. I do think that if you think on a 5 to 10 year horizon, like the crypto as an industry is going to have the most asymmetric returns of any asset class. That's why I'm here. That's why the other people on this stage are here. And so, if the answer is you can put it in a safe and not worry about it, absolutely. If it's you're at 100, like let's chill out a little bit.
Yeah. No, my answer to your question, if you don't own it now, you should definitely buy it, not to make money, but to educate yourself. Because if you put money down, it could be $10, $100, whatever, you're going to start following it, following the news, and educating yourself about whether or not, about learning about it, first of all, but if you can stomach the volatility.
I would say that if you're asking the question alone, then that's the reason why all of us are fund managers and have started vehicles to help people so they don't have to answer that question and they can do either their day job or be with their family. So it's an important question, and I think for a lot of people, the same way you outsource other services or other work, you're recognizing this is a new and interesting and important asset, but the timing work and understanding the trajectory, that's our day-to-day.
So,
Well, it depends on your risk tolerance. And we think actually, in terms of valuation perspective, today is probably fairly valued. It's not extremely valued. I think it's not cheap, but it's fairly valued. I think there's a lot of room to appreciate the next, even this cycle, next cycle, in next 10 years. So depends your risk and reward.
so I'm going to keep calling on various people with good questions, and not everybody has to answer. If you have a good answer, otherwise we'll just have one person answer. Ken, so explain, Ken is a friend of mine. He's been a long-term doctor, went to Harvard Law School, and I don't think Ken knows much about Bitcoin, but I'm going to call on you as somebody who maybe is not an expert on Bitcoin.
I guess I'm a Gen skeptic.
Yeah, explain who you are.
Okay, well, I'm Ken Leinbach. Mitchell's daughters and mine grew up together, and we coached soccer together, so I've known him for 35 years, and I've seen him through various iterations. Most interesting guy I know. That's why I'm here. My thing is, I do not know much about Bitcoin, blockchain. At my stage of the game, I'm not very risk tolerant. I've learned that because I've invested through the .com and through everything else, going up and down. My question is there a place for Bitcoin in somebody who's in retirement?
Of course, it should definitely, because if you're retired, your money actually depreciates very, very fast. The reason is, you think about the government, and if you think actually scammer, we sit here, if you think we are scammer, if you look around, actually the biggest scammer is the central bank. The reason is very simple. If you think about the government, every time there's a problem, they print money. So the Bitcoin invented was the last cycle, the previous financial crisis of 2008, they print a lot of money, trillions, right? When COVID hit, they hit more money. They print 3 times more. Not only in US, in China, everywhere else. So what do you mean money? So if you have retirement sitting savings account, you're gonna be really poor very quickly. The reason when I came to the United States 30 years ago, if you're a millionaire, it means something. Do you know how many millionaires today? Yeah. 65 million millionaires, which means 3 millionaires were fighting for 1 Bitcoin. Millionaire number doubles every 15 years. So if you have $1 million sitting in a savings account, you'll be really poor in 15 years.
I just have one more follow-up question. Sorry. The skeptic that I am. In investment world, as has been trumpeted, index funds beat active managers 90% of the time. So why should we not just invest in index funds of any asset versus active managers like you folks?
So, so to refine that question, let's say Ken wants to buy a spot Bitcoin ETF. Why instead should he invest in your funds?
So it took us 60 or 70 years to get there, and one day the digital asset market will be really efficient, and in 70 years at this conference we can compare a lot of passive products. But if an active fund saves you 70 points of drawdown in a given year, they've made 40 years of fees for you.
And in my emails with CK, he actually outperforms Bitcoin. So he has a better return with less volatility.
So if you want our fund, for example, we outperform Bitcoin, even Bitcoin doubled in the last 2 years. We still outperform Bitcoin substantially. Our volatility is half. So when Bitcoin dropped 80%, we are pre-hedged. So you have to think about, if you're not in the business of risk management, we are professional to manage that risk for you.
I'm looking for IB from Kazakhstan. Is she here? Ah, there you are. Okay. So I was walking around this morning meeting people, and I met IB here, who's from, is a student and is from Kazakhstan, and I thought we'd get a different international perspective. So do you have a question for us, IB?
So hello everyone, I'm IB from Kazakhstan, but I study in South Korea, and currently I'm studying as an exchange student at Bentley University. And as I'm majoring in finance, I'm interested in learning about more blockchain and crypto, and especially I'm interested in hedge funds. But as a starter, as a beginner, I don't know where to start. So do you have any advice to go?
So your question is, how do you start in Bitcoin, or how do you start working for a hedge fund?
Both of them. My question is so I know how it works, hedge funds and derivatives in stock market, but I'm not really sure how it works in blockchain. So my question is, how to start start.
Got it. Does anybody want to take this one, or?
Sure.
Sure, go ahead.
I can give a crack at it. So I think there's a couple of different ways you can go by tackling the knowledge base here. The first is there's probably a couple of books that I would recommend. The first one, which I consider to be the Bible of our space and sector, is the Bitcoin Standard. I think that's a fantastic book. Just a caveat, there's a lot of bias in there for Bitcoin and against everything else, but I think it's a fundamental great book. The other one is another book, DeFi, by Harvey from Duke. A wonderful book about decentralized finance. And the third one is the one that we all just got today, which is the Read, Write, Own by Chris Dixon. I think these three are fantastic books that would give you a baseline. And also, I think there is the community has a lot of great influencers, people, voices through podcasts and Twitter that speak about it. And I would name a couple. I think part of our firm we have Pomp, who's Anthony Pompliano, and I think he's a strong voice. We have Lauren Shin from Unchained, who I think is a great voice. And so I'd encourage you to just get engaged with the community, speak to them, reach out. I think any one of us are accessible and would be happy to have conversations with you about whether it's the industry, hedge funds, just general knowledge. So I would encourage you to do that as well.
So I have a slightly different take. Sachin says do a lot more reading and studying. I believe in more active learning. So first thing is buy $10 of Bitcoin or Ethereum or a few other coins, and then you'll start following the news and learn about it. Second thing, which is related, is come to these types of conferences and talk to everybody, and go to the conference with a purpose. I want to learn about blockchain. How do I do it? And ask everybody in the room that same question, and you'll get tons of ideas, and maybe you'll even get some people that'll help you and mentor you. I see Reba standing near you, so I'm going to ask Reba, introduce yourself.
Okay, thank you, Mitchell. I'm Reba Beeson, and I'm General Counsel with Alpha Point, which is a fintech company. We build crypto exchanges. So my question to all of you, and perhaps Mitchell can direct it more appropriately, is given that hedge funds are typically available only to, let's say, high net worth individuals, how is it that it could become accessible, that category could become accessible to retail investors more broadly? And do you have ways that you can find access for that?
Good question. I don't have an answer to that one other than buying the spot Bitcoin ETF, but that's not a hedge fund that doesn't manage your volatility. But do you guys have any answers for this? You need a microphone.
Yeah, hedge fund, unfortunately, under huge amount of regulation, only for certain amount of high net worth individuals, institutions, so not necessarily always right for individual investors or general public per se.
Right. Is Jess, where's Jess? Is Jess in the audience? Is Tracy in the audience? No? Let's see. Cold calling you.
Hi, everyone. I'm Kate Lawrence from Accelerate. I'm curious how you guys think about product market fit when it comes to tokens you pick, and which ones of the tokens do have product market fit?
It's a great question. So blockchains are networks, and there's certain escape velocity in our view and threshold levels of activity, whether it's network addresses, users, et cetera. And so the problem with playing the lottery is it's not a good way to win generally, right? And so to take the probabilities of success for any token higher in our work, we take a more concentrated, high conviction approach. And part of that is thinking about the Web 2 experience. Look at how the internet evolved. There are a few large platforms that became outsized winners. And of course, there's some great smaller and mid-cap companies as well. But sometimes the risk-reward ratios are actually better in medium to larger sized blockchains, and it requires a lot of selectivity, especially in the new token environment. So we take that into account, realizing that it seems great to think about a 10,000x opportunity, but if the probabilities against that don't match up, there's better, more established, escape velocity-oriented blockchains that provide returns.
Related to that, we never take 50-50 bets. It's like flipping a coin. Are you ready for a question?
Yeah.
Okay.
My name's Jimbo, and I'm finally a doctor candidate in statistics at MIT. I have a question regarding the order book of crypto. I kind of think like the order book is quite thin, so you have a large market impact. So I think regarding both quant and macro, like fundamental investing, do you care about that? And how long typically are you going to establish a position? Hopefully this won't breach your NDA.
No, order books. So we're high-frequency quant traders, so we study order books all the time. And of course, we don't want to have a market impact, so we trade very small quantities every millisecond. And it depends on what strategy we're using, but often we're makers on one side. When we get hit, we're takers on the other side. Or we're makers on one side, hold it for a few milliseconds, and then get hit on the other side. But all of that is very, very important in terms of taking the orders on the order book and posting the bids and offers. Does that answer your question? Yeah. Okay.
It also help keep the transaction costs very high.
Yeah, no. Obviously, we're trading, with a certain transaction cost. So if we're trading on Binance, for example, most of our stuff would not work unless we're on VIP 9, which is the lowest fee tier available. If you just slip to one notch down, a lot of the trades won't work.
So you trade on DEX instead?
No, we trade directly, or we trade through an aggregator, like a prime broker.
The transaction cost is high, right? On the
Well, yeah, but let's continue. Chris, you had a question?
I do. Hey, Chris Pizzo. I run Druid Ventures, an early stage fund focused on digital asset infrastructure and operability. Kudos to you guys making the leap from the classically trained finance route. I'm sure you had some friends, peers that were a bit skeptical, maybe even talk trash. But obviously, as of late, we've seen institutional push with the different spot Bitcoin ETF, the ETH submission, lately BlackRock's, tokenized fund, BIDL. What do you guys think about kind of the convergence or the differences going forward, right? For retail looking into the space, do they go for more of those incumbents which they're used to? Do you think there's a path towards collaboration, or do you think more folks will start going to more crypto native to get different types of exposure? Thanks.
Well, if you look at the ETF today, I mean, it's a mind-boggling number, right? The net inflow is about, from the middle of January to now, it's like 2.5 months or so. It's like a 12 billion net inflows. So if you think about the actual ETF is a very interesting product format. The thing you can compare to the gold ETF 20 years ago. When gold ETF actually approved in 2004, gold been existing for 1,000 years, but when the ETF actually get issued, in the 10 years after that, the gold price rose six times. And globally, the AUM reached 150, 140 billion in gold. Today, if you look at Bitcoin, it's only a few months, right? The ETF AUM already, if you look at the combination of the Grayscale, which is 20 billion plus, versus all the other, new ETF, about 35 billion, so total is like 60 billion. And very, very quickly, in the next few years, the Bitcoin ETF market will surpass gold ETF, become the biggest commodity ETF in the world, based on the transaction, right? So think about, if you don't allocate your portfolio to Bitcoin, you will be substantially underperform the market. If the market actually not only look at the traditional 60-40 portfolio, equity and bond, plus Bitcoin. Last 10 years, if you look at the 40-60 portfolio, it'll get you 75% in 10 years. With the 5% Bitcoin allocation, it doubled it from 75 to 150%. So think about the next 10 years. If you don't have any allocation to Bitcoin, if you are actually a money manager, you may actually out of your job.
I agree with that. I was talking about incumbents versus.
I think just, and also to contextualize CK's answer, like $12 billion sounds like a lot of money. What does that mean? In reality, that's 2x the inflows into the S&P 500 over the last few months. A lot of people don't realize that, but that's more than 2 times the amount of flows that have gone into the Bitcoin than equities, or than the S&P 500 over the last few months. So clearly a huge wave. What we've seen over prior cycles is that generally people start by learning about Bitcoin because that is the largest asset and the most recognized asset, but very soon thereafter, within months or maybe a year thereafter, you get into a next phase of the cycle where people start learning about everything else within crypto, and I expect we're going to start seeing that pretty soon, and that's when people start to explore the Solanas of the world or the Ethereums of the world, and that's when you'll see really the rest of the ecosystem blossom.
But Chris, to answer your question, it's a sandwich. So this is one of the first asset classes where retail and individual users have front-run the institutions. So crypto adoption started as the hobbyist train, and the other side of it now is going to go on much longer because tokenization means everything can now be on the equivalent of email instead of the post office. So I think it's a sandwich to answer your question.
I'm going to ask the final question. We're out of time now, unfortunately. But to remind everybody, all the panelists and I are going into the speaker room where all of you can continue to ask your questions. So final question, and we have to keep it fast. What do you think is more likely this year, Bitcoin hitting 100,000 or Bitcoin hitting 40,000 this year?
I think 100,000, but I would also just brace. I'm expecting a massive sell-off after it hits 100,000. Folks that wanted 100,000 during the last cycle, that were promised 100,000, are going to hit the sell button. We're going to sell, but we'll rebound next year.
Cosmo?
I don't think we see 40K this year, so 100,000.
Raja?
100.
We actually project the model is 90,000, not 100. But But actually, I think if it's go below 50, it's a lot of people jump in. So I don't think it's going to hit
Okay,
the
so
40.
Elaine, there's the answer to your question. Should you buy Bitcoin now? You have 3 of the 4 say it's going up. So thank you, everybody, and please join me in thanking our panelists. And we're going to the speaker room now.
Thank you, speakers. We'll be doing a short Q&A session to continue this discussion in room 108. So please make your way to room 108.